Hey guys, this is Martin Perdomo, the Elite Strategist, and you're listening to Latinos in Real Estate Investing Podcast. And in this episode, I recorded live while I was doing a real estate investors meetup I hosted not too long ago. In this meetup, the topic was how to raise capital, how to raise private money. And I share a few strategies on how to do that and the things you need to learn and you need to do in order to raise capital effectively for your real estate and for your real estate deals. Guys, I hope you enjoy it. And as usual, if you want to connect with me, we can connect. You can visit my Strasbourg REI website. If you or someone you know is looking to invest in real estate passively, you can visit strasbourgrei.com. You can go to invest passively or partner with us. You can see how we do that. We have a ton of content there, a ton of free content, and a ton of different things you can do. Connect with me on social media. I'm on Instagram at theelitestrategist.com. At the Elite Strategist, not .com, but on Instagram at the Elite Strategist. I'm also on Facebook. Look me up there at Martin Perdomo, the Elite Strategist, or just look up the Elite Strategist. You'll find me there, guys. I really hope you enjoyed this episode. I had a lot of fun doing it, that's for sure. And I'll see you at the end of this episode. Thank you guys for listening and tuning in. Appreciate you.
Since I'm going to be standing here for a few minutes with you guys today, is it okay if I tell you a little bit about myself tonight? Is that okay if I just give you a little bit about me and how I got started in this business? I got started in this business back in 2007. But the reason I got started in this business in 2007 was because when I was 16 years old, my mom kicked me out. And I was sleeping in the trains and in beaches in New York City. And I made an unconscious decision that I was going to buy a lot of real estate because I realized at 16 years old that you needed food and you needed shelter. Two basic necessities. And today I'm 43 years old and I'm looking back and I'm looking at what's happening in our country and I'm looking at that year over year, rents have increased by 14%. I made that unconscious decision when I was 16 years old. And I'm glad I did. But I did it out of scarcity. I did it out of fear. I did it out of pain. It wasn't, I'm going to use this to create wealth. Right? I just had an idea. I was like, well, I remember standing in Harlem. How many of you are familiar with Harlem? Right? If you guys remember Harlem back in the 80s and 90s, right? It was burned down buildings. All 125th Street was all burned down buildings. And I remember as a young man standing there, my then girlfriend, my wife, at the time, I remember my wife coming to pick me up one day from work and me saying to her, you see that building right there? It was across the street. I used to work in the body shop. How many of you are familiar with the body shop? The lotion store, like Bed Bath & Beyond. Anyways, I used to manage a store on 125th and 5th. And one day my wife comes to pick me up, my girlfriend at the time, and I said to her, you see that building across the street? If I could just buy that building, fix it, I'm 17 years old, okay guys? Fix it, 17, 18. If I could fix it, rent it, I could make so much money. I just had this idea. I knew nothing. No education real estate. No one in my family was a real estate investor. I knew nothing about it. Right? Because all the investors, all the people I looked at that were buying real estate didn't look like me. That was one of the struggles I had. They were Jewish people. I lived in Washington Heights, right? So it's all high rises. So who owned all of those high rises, right? The people I used to see coming around were the Jewish people, collecting the rent or walking buildings, right? There was no one in my circle. How many of you are the first homeowners in your family? I'm the first homeowner in my family, right? So I didn't even know anyone that owned a house here in this country, right? I just knew intuitively, out of pain and instinctively, that real estate was the place to be. But anyways, I bought my first property when I was 21, was a house, my biggest liability. I'm going to challenge you all. How many of you know what an accredited investor is? 1, 2, 3, 4. 4 people know what an accredited investor. Okay, so an accredited investor is an individual or a couple that their net worth increases is over $1 million, excluding their primary residence. Combined, you got to have a gross income household income of $300,000 or more. Right? So your net worth is your assets minus your liabilities equals your net worth, and you cannot include your primary residence in that. Right? What is the value of being a accredited investor? Right? So there are some investments, REITs, some syndicators in real estate, that if you are not an accredited investor, I can tell you that in the circles I travel, all right, a lot of guys I know that are friends of mine, they raise capital, and when they raise capital, we're going to be talking about capital, that's why I bring it up. When they raise capital, they only want to deal with accredited investors. I'm going to let that sink in for a minute. It means you have to have a minimum of $1 million in net worth. So what happens to the poor and the middle class? And you cannot include your primary residence. Most Americans that own a home, what's their biggest asset? That's right. But that's how it's sold. That's how it's sold, right? What is the quote-unquote biggest asset?
The house.
The house. But yet, the rich people say, to be considered an accredited investor, you cannot include the equity in your house. To invest in this type of stuff that can really get you strong returns outside of a CD, outside of a savings account, outside of that stuff. Yet, for you to invest in a strong syndication deal where you're going to double your money in 3 years or 4 years. By the way, how many of you know how to double your money in 3 to 4 years? Not many people know how to do that. But yet there are investments within real estate that you can double your money within 3 to 5 years. We just doubled our investors' money in 9 months. I talked about this here last month. I've talked about it before. In the 11 unit we purchased, we forced appreciate it. We have $520,000 all in, and we have it on the market for $1.1 million, a $600,000 return. Our investors, we have $150,000 private money invested in the deal. We're going to double their money. They're going to get $100,000 if we set it at that price, right? So there's investments like that out there. But in order for you to be an accredited investor, they're telling you you cannot use your equity of your house, does not count. It's got to be outside properties, it's got to be businesses, it's got to be other things, other assets that you own to be considered accredited. Now, is it just me or there's something wrong with that picture? Right, because they tell all of us in this room, the bankers and realtors, that the American dream is to own a home. And I'm going to tell you that the owning a home is your biggest liability. It is your biggest liability. It's not an asset. And it's clear when to be an accredited investor, they say you cannot include your home. Right? So, when you start understanding these things, when you start really understanding how to look at money, then you start playing with money differently. I raised some money from someone. I got a family member, and I'm not going to mention any names. Family member gave us some money. Actually, he just wired the money to my wife. I didn't need his money. He sent the money to my wife. Here, I'm going to give $10,000 invested for us. So I gave him the same return I give everyone else. 10% as soon as we put it in the deal, right? When the deal gets flipped, you get your money, right? Promissory note that works. Well, 3 months into the deal, we get a call, and the call is, I need my money, I'm desperate, I'm in trouble. So I had to liquidate him. I liquidated him while I was in the middle of the rehab. Right? I gave him his money back in the middle of the rehab, plus his return, because I'm a man of my word, I honor my word, plus his return, and I had to liquidate him. And then I sat down and I thought, what was my lesson here? I sat down and I thought, what was my lesson here? And I thought, you know, why is it that this type of stuff, this type of opportunities is not readily available for middle America, for poor people? right? And the reason being is because exactly of that. If that's your only $10,000, if that's your only $50,000, the minute something doesn't work for you, or the minute life happens to you, you're gonna be blowing up my phone. So it was right then and there, that I said, okay, that's why these guys all do accredited investors. It was right then and there I said accredited investors only. Because I'm not going to deal with that. I'm in the middle of a rehab and someone wants me to give them, I'm in the middle of a project, you know, things take time. You know, these things take time to execute on the business plan. I'm in the middle of a project and someone's blowing up my phone, they want the money back, right? So anyways, guys, we're going to be talking about this stuff. We're going to be talking about mindset around money today, because that's an important piece of when you're raising capital, right? I've lost a lot of money. I'm going to tell you that. I've lost a lot of money in real estate. Not a lot of money. My first investment, I was $100,000 in the water within 2 years, in 2007, because I didn't know what I was doing, because I didn't know how to do the numbers, because I didn't know the math. And all of you here are investors or want to learn to invest, yes? I'm gonna see a show of hands, yes, right? Write this down. If you ever need to make a decision when it comes to real estate, do the numbers and the numbers will tell you what to do. Do the numbers and the numbers will tell you what to do. The math will always tell you what to do. But there's one thing that you need to know before you do the math. You need to know what is it that you want. If you don't know what you want, the math won't guide you in the direction of the decision on what decision to make. In other words, what do I want? Do I want to double my money? What do I want? Do I want cash flow? What do I want? Do I want long-term wealth? What do I want? Why are you playing this game? Does that make sense? Does that feel right? Sound right? Do the math. The math will always tell you what to do. You're not sure, some wholesaler, someone's telling you this is a good deal, this is a fantastic deal. Sure, let me do the math. Nope, it's not a good deal for me. Here's why. It needs to be this for it to be a good deal for me. Right? Because look, there's a lot of money in the streets right now, a lot of money in the street that needs to be 1031, and they're okay getting, you know, there's a ton of money in the streets that needs to be exchanged and put into other assets. And they're okay getting a 3-4% return on their money on an A-class building. Are you guys okay getting 3-4% on your money? I'm not. I am not okay getting 3-4% on my money. I know how to get 17, 20, 30, 40% on my money. Right? But there's a lot of money out there that's because they have so much money that they're okay getting 3-4% because they're trying to tax shelter their money. So we're going into some other strategies, some more advanced strategies. They're trying to avoid paying taxes. So they prefer to put it in the 3%, and somewhere they're going to get a 3 or 4% return and not give Uncle Sam 15, 20, or 30%. Right, because you have a window period of time. But anyways, is it okay if I share with you a little quick story, a quick metaphor on real estate? Yes, sir.
Can I ask a question?
Yeah, sure.
You mentioned it before, and I was at another meeting the other day.
Came up again?
Yeah. What does it mean to syndicate?
Syndication is when you raise capital, right? It's when you raise money to buy a building. So for instance, or to buy a business, to buy something, right? So a syndicator, a GP, you could have multiple GPs, which are general partners. So I syndicate. I'll give you a perfect example, the 11 unit. We found this 11 unit in Tobyhanna. We bought it for $410,000. We have $100,000. It's 522. We did all the numbers. 520, 522. In the deal, we fixed it, we rehabbed it, we forced the rents, we increased the rents, which means we pushed the value of the property up. When I go to you now, when I found that deal, I created the business plan, I did the numbers, right? So I sat down and I said, okay, what's my business plan? What is it? What are the current rents? What can I get it to? Right? And when I get it to that, how long will it take me to get it to that? At that point, when I get it to that number, when can I refi, give my investors their money back, keep them cash flowing, and then sell it? At what point do I sell it so I could double their money? Right? When we did that, right, we created the business plan. Okay, this is a sound business plan. Yep, we can execute on that. We have the team, we have the people, we can do it. Now I go to you and I say, hey, Bob, I have this deal. I need, I'm taking minimum $50,000 and $50,000 investment. I need $50,000. We're going to give you a 17% annual return on your money. We're going to double your money in 5 to 6 years. So you're going to cash flow every quarter. We're going to give you quarterly distributions on your money. Year 3, we're going to refi the property, buy you out because we're forced to appreciate the property, buy you out. Keep the property for another 2 to 3 years and then sell it for $200,000 or $300,000 profit, and then we're going to give you your percentage of the equity. So you're an equity owner in the deal, but you're passive. I'm the general partner, you're a passive investor. In exchange for your $50,000, I'm going to give you 30% equity, you and the investors, whoever here wants to invest. So when I sell that property and there's a $600,000 profit, I split the 30% profit with the investors. That's what a syndicator does. Does that make sense? Yes, sir.
You also get a syndication fee?
We get management fee. Yeah, we're going into more complicated. We get an asset management fee. We get an acquisition fee. It depends. It's all on how I structure it, right? It's all on how it's my deal. So I'll prepare it. I'll say I'm going to charge a 2 or 3% acquisition fee. I'm going to charge whatever I'm going to charge, a management fee, whatever. You guys want to be in the deal, you can get in the deal. But the thing is, how many middle class people in middle America or poor people know to put their money in deals like this? Do they even know that there's things like this out there? So we syndicators, real estate syndicators, are one of Wall Street's biggest threats, because we're taking money off from Wall Street and putting it on Main Street and giving people better returns. Not in this crazy market. The market is stupid right now. It seems like every other day I look at the market, it's like new records, new record high. It's like, holy smokes, this is going to blow bad, man, when it blows, you know? But you had another question?
When you do syndication or when you do look for investors, a credit investor, don't you got to have like 3 points of contact or 3 contacts before you can actually receive money or get money for investment?
I don't understand the question. Rephrase the question. 3 points of contacts meaning what?
Like you need to have contact with that person at least 3 times.
That's the different. That's when that's a fund structure.
Okay.
That's different. If you have the fund structure set up, if you have a 503B, I think it is. Don't quote me on that. I think it's a 503. If you have the fund structure set up, that doesn't apply. You just need to have the paperwork to present, the risk and all that stuff. When I'm syndicating and I don't have a fund set up, then I need to have a prior relationship to them, 3 contacts or more, right? So I need to have a one-on-one. I need to know this person. So it's not like I just met you. So it's not like I just went to you and I'm like, hey, give me $50,000, invest with me. I need to have had proof that I know this person. I've had engagement with him prior than to just this deal. Right, so I've been talking to him, or I have a personal relationship, we've had lunch, and I've prepped him. So one of the things I'm going to share with you guys later is it's how to get credibility, how to do that when you're raising capital, right? I'm going to share something with you guys. But anyways, you know, most people, you know, today I got on a call today with a friend of mine, a very wealthy friend of mine. Actually, I interviewed her on my podcast a few weeks ago. Tamar Hermes. Her husband is the SBU. You guys have seen SBU? The New York. Her husband's a producer of that show. And so I got on a call with her. You guys should check out her podcast, by the way, her interview. Very good content. She gave some really good strategies. I got on a call with her and I said, you know, Tamar, I have some capital I want to invest and I want to deploy. Where are you putting your money? Right? What deals are you going into right now? Right? And she gave me some places. My point is, where are you going to learn about money? Where are you going to invest your money? Are you asking your neighbor that lives in a house just like yours? Right? Seriously, guys, think about this. Who are you learning from about money? Who are you going to, people with money? You know, and I had my son in that call. My son was sitting there in that meeting. It was a Zoom call. He was just listening in. And I said to him, son, what did you learn, right? And he said something about high risk or something like that. And she was suggesting a syndication deal for me, where this syndicator has 6 deals, right? And in the conversation, she's telling me, you know, Martin, I have 7 figures invested with this particular syndicator, and I'm going to deploy some more capital into this syndicator. I'm going to put some money in there. I think you should go, it's like 18% annual return. It's really strong deal, really, really strong deal. And it's a 3-year exit, really strong deal. And, I shared with my son, I said, son, the reason I have you here, sitting here, is because I want you to get used to listening to conversations like that. When you hear people talking about investing 200,000, 7 figures, it's normal to you. It's normal to you. It doesn't shock you. It doesn't scare you. Because here we are, and we're just talking, and she's telling me I'm doing this, I'm doing that. I mean, we're friends, so she's just giving it to me. I have some money here, I'm going to put some money in a storage in Austin, some storage development, some storage unit development. But again, guys, who are you going to learn about money from? Who you're talking to. That's important to who you hang out with and who you listen to, right? So most people go through life like the man on the horse. And I share this with my guys all the time is, there's this man on this horse, this really good looking guy on this horse, galloping down the street, well dressed, well groomed, and another man looks up at him and he says, sir, where are you going? You look like you're going somewhere important. And the man looks down at him and he says, I don't know, wherever the horse is taking me. And that, my friends, is how most people go through life. That's, my friend, is how most people go through with their finances. They have no intention, and I put it here or back there. What is your intention? I gave you guys handouts when you all walked in. Okay, I gave you guys some statistics, and a moment ago I said, if you want to know, if you're trying to make a decision within real estate, and you want to know what to do the math. Remember when I said that? And now I'm going to tell you, do the math and look at the data. Right? Do the math and look at the data. The data will assure you that what decision you've made is the right decision. Not feelings, not what someone else is telling you. Do your own due diligence. I was telling you a moment ago that I was on the phone with my friend Tamar, and she had suggested, so how many of you are familiar with Ty Lopez? Many of you know Ty Lopez. He's on YouTube. Anyways, he's an investor, very well-to-do guy. He has a bunch of commercials on YouTube and a bunch of stuff. Anyways, she knows Ty Lopez, and Ty Lopez buys a bunch of, he buys businesses, or his entities buys businesses and struggling businesses, and they change them. And anyway, she's got a bunch of money invested with startups and venture capital and different things. And so she was suggesting to me, we were in talks, and she was saying, well, I invest money in some of these things. And I said, well, Tamar, that's cool, but I don't know those things. What I know is real estate. Like, I know real estate. A syndicator can come to me and present a deal to me, and I can analyze the deal myself and see if they can really execute on that business plan. Right, because I know how to do my own due diligence. I know how to go look at see if it makes sense, if it's a sound area, if there's population growth, if there's low unemployment. I can do that, and I can feel comfortable giving my money to a syndicator and saying, "Yep, go execute on that deal," because I did my own due diligence. Right. So this is why I gave you this. This is for yourself. So. In the monthly indicators, and this is from Monroe County, guys. The monthly indicators, I'm just going to give you a 50,000 foot view. So I'm going to take you out and then I'm going to zoom in, okay? We're going to look at last month's data and then we're going to look at today's data through 4:59 p.m., which is when I printed this. You could look at the time, okay? So if you look at 1 year over year closed sales, we got a negative 17%. That's obviously because inventory is low. When you go to the next snapshot, you got 1 year change in homes for sale, 25.9%. Inventory is low, same thing, right? When you go at look at the next one is just crazy. 1 year change in medium sales price, 40% for Monroe County. Holy smokes. So, on the onset, you could look at this data and say, what are you thinking? I want to just go around the room real quick, randomly. What are you thinking when you look at this data and you hear that? What are you feeling? What are you thinking? Anyone? Just shoot it, whatever you're thinking.
Market's on fire, enough supply.
Not enough supply.
Market's on fire.
Market's on fire. Anyone else?
Seller's market.
Seller's market. What are you feeling? What emotion are you getting when you look at this data?
Excitement.
Excitement, that's good. What else? Anyone else? Right? So when you look at this data, looks good on the onset. Right? But if you don't know the trend, if you're not paying attention to the trend, you could be buying at the top of the market. And if you're like me, like in 2007 when I bought that duplex for $275, and a year later, 18 months later, I was at $179, you could be on the water real easy if you don't know the numbers and you don't know how to buy right. Right? So this is exciting, but what really makes this exciting is the next sheet I'm going to show you, because this is through July. Right? This is a lag indicator. So in business we call this a lag indicators. We have lead indicators, guys, and we have lag indicators. This is a lag indicator. This is only a P&L. How many of you know what a P&L is? P&L is a profit and loss statement, right? When you look at a profit and loss statement, what is it telling you? How much money you made, how much expenses you had, what's your net income. But what is that really? That's a lag indicator. You can't make decisions with that. It's not going to help you make better decisions. That just tells you what you did. Right? So what I'm about to show you is a lead indicator. Lead indicators are the things that we're doing today that will impact us tomorrow, in 60 days, 90 days, 120 days, right? How are you investing your money today? You know what the main difference between rich people and poor people is? Bingo, mindset, right? A poor person and a middle class person, they only care about now. I want to have that car now. I want to have this right now. I need to feel good right now. Upper middle class and wealthy people, they think of tomorrow. They're willing to sacrifice now for a better tomorrow.
Delayed gratification.
Delayed gratification.
Delayed gratification. That's the main difference. Right? That's the main difference. This right here is a lead indicator, guys. This is going to allow you to make better decisions. So I gave you this paper. This is summary statistics, right? When you look at the summary statistics, now you can make better decisions. So let's just say hypothetically that you're thinking about coming into this business to be a flipper. How many of you want to flip? We got a handful, 1, 2, 3, 4, 5, right? You come into this business, you want to flip. Well, how do you know you're coming in at the right time? How do you know that for sure when you buy that property it's going to sell? How do you know? How would you know right now?
The numbers.
What numbers? If you didn't have this, what numbers? That's my point. What numbers? You're hearing the news that everyone's telling you the market is hot. You're shooting in the dark. You're shooting like I was shooting. I'm going to buy real estate because everyone else is doing it. And you wind up buying high. This is what's going to tell you, yeah. I'm going to tell you, and I'm going to show it to you right now. So when you look at this, okay, by the way, this is only Monroe and Pike County. This is both counties. Monroe, Pike County. When you look at the top numbers, I want you to go to new. 1, 2, 3, 4 lines down. If you look at the dates on the top, this is from 8/2, because 8/2 was a Monday. Sunday doesn't, it wouldn't let me pick Sunday. 8/2 to 8/24 at, what time did I actually print this? At 4:59 p.m. and 32 seconds, so an hour ago. That's how fresh this data is. Okay? Go 1, 2, 3, 4 down, new. How many, what's the number for new? How many new properties in the market?
381.
381. Go one down, one down. How many went pending in that same period of time? 354. Just on those two numbers, what does that tell you? What?
Things are moving fast.
Things are moving fast. What else? Low inventory. What else? Competition for who though? Buyers. Right? So if I'm looking at that snapshot, if I'm looking at that period of time, so from 8/1 to today at 5 o'clock, 381 properties hit the market and 354 got gobbled up. That means I need to be in this business. Does that make sense? Regardless of what anyone else is telling you, regardless of what the gurus on YouTube are telling you, there's a bunch of guys out there fear-mongering right now. The market is coming to an end. Yeah, maybe. The market is this, the market is about to crash. The real estate bubble is about to burst. Does that show you this right here? Is that our situation? Is that our reality based on the numbers? Nope. By the way, let's keep going down, okay? Let's keep going down. Let's keep going down this list. When you go down all the way down to the bottom number, current active, what's the current active number? 871. Do you guys know how much a normal market inventory is supposed to have on the normal market? What's the inventory? How many months of inventory? 6 months. 6 months, that's correct. 6 months. For us in Monroe and Pike, it's about 3,000, that's about 3,000 units. Normal market for us. There's only 871 on the market. So it'll be a while before, or we have to have a big something happen for our market to slow down. Is it going to slow down? Absolutely, eventually. But based on the data, I'm months potentially, maybe a year out before the market slows down for us here locally. Is that making sense, guys, when you're looking at the numbers? Right? So watch the data, watch the numbers will tell you what to do. Okay, guys, so I want to go into how many of you, right? How many of you know a person that's constantly going from one business to another business to another business to another business? Anyone met someone like that? A couple of people, right? Met someone that they just like, I have one great idea today, and tomorrow they have another great idea, and hey, come do this with me now, and hey, come do this with me now. By the time they come to you the third or fourth time, where are you with that person? Are you doing anything with them? Right? So we're going to talk about raising capital. Do you trust that person? If they came to you after coming to you with 4 ideas, if they came to you and say, hey, I got this great real estate deal, come invest your money with me, would you invest with them? Probably not. What if your cousin Joe, and if that's you, by the way, if that's you in the room, because that used to be me, I'm talking about myself here, that used to be me, I used to be that guy, shiny object syndrome, from one thing to the other thing, to the other thing, to the other thing. If that's you in the room, it's okay. I'm going to give you some strategies to change that. But you got to commit. I have the formula up here somewhere. In order to succeed, you got to decide, you got to commit, and you got to take action. You got to commit. That's the first thing, right? You got to commit. So I'm going to give you the first step to raising capital, guys. The first thing, and you guys want to write this down. Get educated. Learn about real estate. You want to be good at raising capital? Listen, guys, I got people that actually, and I'll speak freely here, the pastor of this church has approached me and asked me, he's come to me and asked me, I want to give you some money to invest in your deals. Right? Get educated. The only reason he wants to give me some money to invest in my deals is because he knows I know what I'm doing. Get educated, guys. Learn about real estate. Immerse yourself in real estate. Learn the language, learn the terms, learn what NOI is, learn what cash on cash return is, learn the numbers. You can't go to someone, especially guys, listen, people that are going to give you money, people that are going to give you big money, they're going to ask you some weird questions. You can't go to someone without being able to break the math down for them. I always tell my students, listen, wealthy people, I have a lot of wealthy friends. When you're talking to wealthy people, they ask you real weird questions. And the reason they ask you weird questions is because when you're raising capital from them, it's not because they want to, once they get past that you have the right skill set, or you have the right skill set, or you have the right skill and you know what you're doing. What they want to know really is, they want to know your level of integrity. What they really want to know is, they want to know that if I give you my money and things don't work out in whatever deal we're doing, that you're going to do the best possible thing that you can to get me my money back, or to be in integrity. Right? So the way you do that though, guys, is by first getting educated. You can't speak about something confidently if you don't know how to run the numbers. So I can't go to Damien and be like, Damien, I got this deal, and Damien is like, okay, so what would my cash on cash return be? And you don't know how to do that math. Does that make sense? You don't know how to do that math, you are not going to get the money from that person. Right? What's your annual NOI? And you don't know what NOI is. When are you doing your distributions, your quarterly distributions, and you have no idea what that means? Right? So get educated, learn the terminologies, right? When you have a deep understanding of real estate investing, you're able to create, write this down, when you have a deep understanding of real estate investing, you're able to create multiple exit strategies on your investments that gives your private investors the confidence that you are competent with their money. Let me give you an example of that. Let's suppose that you're buying a flip, right? Let's suppose you're buying a flip, and a savvy investor is going to ask you, hey, when are you going to give me my money back? Right? You say, hey, listen, the market's hot based on the data. This is what I'm projecting. We're projecting 4 or 5 months, max. Right? But I'm going to give you a 12-month promissory note, but we're projecting 4 or 5 months. And they say, okay, fine. What happens to my money if the market turns and a 2009 occurs again? What happens then? And you can't sell my property. And you don't have another exit strategy. And you say, oh, I don't know. Are you going to get that person to give you their money? Right? But if you say to that person, hey, listen, this is what we're doing, because I'm buying at this price and because the rehab cost is costing me this much, or because I'm buying at this price and the rehab cost is costing me this much, and I'm going to rent this property at this price, and I'm going to appreciate the value XYZ. Regardless of what happens in the market, my exit strategy is very clear. I bought this thing for $50,000. This thing's going to be worth $200,000. If I got to put 50 and I got to pay everyone and it's 110, I'm going to go to my lender, which I already have relationships. I'm going to refi that property. I'm going to make good on my word because I have all this equity. I'm I'm going to refi this property, give you your money, give you 10%. I'm going to rent this property. I'm going to cash flow it until the market changes. Do you think that person's going to give you their money then? Right? So you see, having multiple exit strategies. Right? Getting educated allows you to have multiple exit strategies. Number 2, let everyone know what you're doing. I'm going to ask you all a question. How many of you are in sales? Everyone's hand should be up. All of you are in sales. Every one of you is selling something at some point to someone every single day. How do you feel about salespeople, by the way? Anyone? What's your thought?
Shady.
Shady, okay. Anyone else? How do you feel about salespeople?
Dishonest.
Dishonest, okay. How else? Who else?
They're fantastic.
Fantastic, I love that. Yes, ma'am.
Pushy and annoying.
Pushy and annoying. I'm going to tell you right now. Yes, sir.
Risk takers?
Risk takers, okay. I'm going to tell you right now, those of you that said pushy, annoying, all those negative connotations around salespeople, you need to start changing your mindset around it. Because that is the same thing you're going to project when you're trying to convince someone to give you money. I've been in sales for 23 years. And if you don't start to reframe the way you think about salespeople when you're raising capital, what are you doing?
Projecting that energy.
When you're raising capital, what are you, when you're sitting down with someone,
You're selling.
so if your connotation on salespeople is negative, how good of a closer are you going to be? How convincing are you going to be? Right? You're going to come off, unconsciously, you're going to come off as that pushy, that dishonest, whatever. And consciously, that's how you're going to feel about yourself, because you're selling. You're convincing someone to give you their money to invest it in your project. What is that? The sales, right? Yes? Right? So you need to, that's the first place you need to start, is you need to work, look in the mirror and say, okay, how do I feel about salespeople? What has been my experience with salespeople? And what does that have to do with me now?
I know salespeople.
There you go. That's right. Right? So my business partner is a doctor. We just got CoStar. How many of you are familiar with CoStar? CoStar, one handful, one person. CoStar is software for, I'm going to be giving you guys more data. Next month, I'm going to have way better data than this stuff. CoStar is a software for commercial real estate investors. Right? And in there, I can look at bigger multifamily assets. I can look at who owns what's happening in that market, what's the vacancy in that building. Like, there's a lot of data I can look at. So we just got the software. It's very expensive. It's costing us about $1,000 a month. We just bought the software because we're going to start going after larger multifamily. So she calls me on Friday. She knows me too well. And she's like, Martin, her and her assistant were going to make calls. Now, mind you, she's a doctor, right? She's been a doctor for 20 years. She's an entrepreneur, though. And she's like, we're going to make calls today, Martin. But we really want you to make calls with us. I really want to see you make a call. I really want to see you make a call. And she was like, when I call these sophisticated investors, because these are sophisticated investors, right? If someone owns 25 units, 100 units, they're sophisticated investors. These are syndicators, these are sophisticated people. She goes, when I call these sophisticated investors, and they're like, yeah, I'll be interested in selling. Let's suppose they say that, yeah, they'll be interested in selling, then what? She says to me. She goes, then what do I do? She was like, it just feels kind of, her words, it feels kind of intrusive to ask him for a P&L. And I asked her the same exact question I asked you. How do you feel about salespeople? See the word she used, intrusive? That's really how she felt about salespeople. She was smart enough, she was like, I love them, right? You're not going to get me like that, right? But I said, Danielle, Just think about this for a moment. You're talking from one entrepreneur, because she's a successful entrepreneur. She owns multiple practices. One entrepreneur to another. You own assets. What is a P&L? What is a P&L? It's just numbers with a date. Why wouldn't someone give that to you? They can cover the date if they want to. They can cover the name of the company. So what? It's just numbers. And in order for you for us to underwrite the deal and make them a proper offer, we need to look at the numbers. If not, we're going to overpay. Does that make sense, guys? So her mindset had to shift around how she looked at when she made these calls. So I'm going to challenge you today to pay attention on what you think when you think of salespeople. Because when you're raising capital, you are convincing someone. You're not intrusive. Actually, when I'm raising capital, guys, I feel like I'm giving people a tremendous opportunity. You want to know why? Because I know that what I can do for you, you are not going to find it out there. You're going to go to your banker and you're going to tell your banker, I'm getting 10, 12%. Can you get me that? And they're going to say, hell no, where you're getting that.
Right.
And I'm going to get it for you in 90, 120 days. I'm going to double your money in 3 years. Go beat that. What am I doing? I'm giving you an opportunity that otherwise you wouldn't have with your money. Your money is sitting in the bank doing nothing for you. You see the difference in mindset? What's your perspective? I'm helping people. Right? I'm helping people. I'm giving people the opportunity to be passive investors and make money and allow me to make money for them on their money that they otherwise would not make or know how to make. Because if they did, where would they be? They'd be not talking to me, right? Not on my Zooms, not on my webinars. Right? They'd be doing it themselves. They've already have. They'll be educating me. Listen, I got my money here and I'm doing this much. And you know, like my friends, the ones I call. When I have money, I'm calling my friends. Like, yo, where are you putting your money? I'm calling my wealthy friends. Like, yo, I got this money, I want to invest. I just got this investment return. I want to invest it. Talk to me. Where should I put it? What are you doing with it? What are you doing with your money? Right? Number 3, start asking people. When I make this statement, how does it make you feel? How do you feel around asking this question? Will it have a big impact on your how you feel about asking people will have a big impact on your outcome. How you feel about asking people will have a tremendous impact on your outcome, right? You have to make sure that you feel certainty. How do you get certainty when you're asking someone? When you're actually, and it's not asking, you're helping someone. How do you get certainty around that? Who said it? Right there. What's your name? Do you stand up?
Destiny.
What's your name?
Destiny.
Destiny. Welcome, Destiny. What did you say?
Being educated.
Being educated. That's it. That's how you get certainty. That's how you get certainty in your nervous system, in your body, in the way you stand, in the way you talk, when you're talking to people. That's how you get people to come to you. You hear what I said? That's how you get people to come to you. Now, when you let everyone know, what I'm talking about let everyone know is, how many of you have social media here? How many of you are real estate investors? Everyone's hands raised. Everyone's hands should be raised, right? You need to start identifying yourself of like the person you want to become now. So when I talk about let everyone know, start sharing some posts on real estate. Start educating people. You read something, you go to my website, Strasburg REI, I have a bunch of newsletters on things to do to flip, things not to do, things to rent. Start sharing that stuff. Start letting the world know that this is what you do. Subtly. Does that make sense? You go see a property, do a video. Bam, guys, I'm over here looking at this property, I'm analyzing this property. You're not asking anyone for money, right? You're just showing them, hey guys, this is what I'm doing. This is what I'm doing. I'm looking at properties, I'm looking at deals.
At a meeting.
At a meeting, correct. Right? This is what I'm doing, I'm working on myself. Let everyone know. I'm not talking about let everyone know like, hey, Damien, I'm selling real estate now, give me your money. No. Or I'm doing real estate. Just subtly let people know on your news feed, hey man, I'm at this meeting, I'm doing this, I'm looking at this deal, I'm looking at this house, check out this bathroom, look at this thing. People will be intrigued. What are you doing? How's that going for you? Who wants a magic question on how to ask people? Who wants a secret sauce on how to ask people without asking them? Come on, everyone's hand should be raised. Were you here? Who wants a secret sauce? I'm going to give you the secret sauce. How to ask this question, how to ask people without asking them. Hey, Damien. You know I'm messing around with, you know I'm doing real estate, right?
Yes, sir.
You see my stuff, I'm doing a lot of real estate, I'm getting educated, I learned a bunch of stuff, and I got some deals I'm looking at. And I'm gonna really soon be doing a deal. Really soon, I'm looking at some deals, I'm underwriting some deals right now, and some of them look really good. Do you know anyone, not you, do you know anyone that might be interested in getting above average returns on their money while secured with real estate? Not you, Damien, anyone that you may know.
I might.
Really?
Yeah, me. You know, like, what do you say?
I know this guy Bob.
See how I'm asking without asking? Bendy, do you know anyone that might be interested in investing passively in a deal and get above average return between 10 and 15% in 6 to 8 months on their money? Not you, but anyone you might know. If she has the money, what's the first thing she's gonna do? What do you mean someone? What do you talk to me? What do you got? Right, I have 50 grand. What are you talking about? Show me. And voila, you've opened the door to talk to them about your deals. And there's that three time, what's that?
They asked you.
They asked you, correct. They've asked you. Prepare a credibility book. So now what? So now I've asked Damien, hey Damien, do you know anyone? Do you know anyone? And Damien says, what do you mean do I know anyone? I'm right here. I got 50 grand, I got 100 grand. I'd like to invest some money in a deal with you. Absolutely. What do you got? What do you do next? Do you just freestyle it? Some of you know my banker. I bought him here. Some of you do, some of you don't. But when I started a relationship with my banker, he comes to my office, a local community bank. So local community banks are really big on relationship, integrity, and the human to human, the person interaction. They're not like the Wells Fargos of the world. They look at a piece of paper and that's it. If you fit the guidelines, that's it. You want to build relationships with community banks. And my first deal I took to these guys, he comes to my office, he wanted to come to my office, he sat in my conference room, we're talking, and you know, he's checking me out. He told me straight up, he was going to vet me. And he tells me whatever his pitch is. We look at the three C's, character, credibility, and whatever the pitch they have. It's character, credibility, and something else. Whatever, and I had a really strong deal. It was a fire property. It was a really strong deal, and I was like, listen, I'm buying this cash. I have private money. I'm buying this cash, but I'm getting ready for my exit. So this was before I actually purchased it. A few weeks before I actually closed on the deal. I need to refi this. I need to refi this deal so I can buy my investors out, right? Give them their returns. So he's looking at the deal, whatever, and he's like, yeah, we can do that deal. So I give him the paperwork. He takes it to his office. He starts to underwrite it. At this point, my mentor gives me this. I find out about a credibility book. I get it sent over to me, and it's already pre-thing. I put my picture in there, I put my bio in there, I put my previous deals in there, I put my market, right? So the credibility book shows you put what market you're going in. So let's just say Monroe County. You go to Google and you look at, and you go, we have some places you go. You go and it shows the graph. What's employment? What's the unemployment rate there? What's the rent growth there? What's been happening there? What's the migration pattern there? So you start just taking it from online and you start putting it in. And you reference where that data came from. Start putting it, put it in. You got a couple of deals. If you don't have any deals, you use one of my deals. Say, hey, my mentor, this is the deal. This is the type of deals that we're looking to do. Here, before, after, here are the numbers. This is the type of stuff we're gonna do. You don't have to lie. Don't lie to your investors. These are the type of deals we're doing. Like this is a sample deal of what we will do. With pictures, bars, graph. When I sent this to Tony, he left, I got the credibility book, I spent an hour, tweaked it, made it mine, emailed it to him. I also have it in a nice binded thing. I haven't used it in such a long time. Haven't raised capital in a long time. I just got capital. People bring me money. But it's in a nice binder that when you ask the question, and people are like, hey, me, you say, okay, great, let me show you this. You know, there's a little bio, there's a little thing, here's some of the sample projects, here's the thing. And by the way, this is yours to keep. Take it home, review it, and let me know when you're ready. Or I can call you when I have a deal and we can execute the deal. When I send this credibility book to Tony, he picks up the phone and he calls me back and he tells me, hey Martin, I just want to tell you that Mark is the head of finance, the guy that approves all the loans. He goes, I want to just tell you that we approved your loan and this showed that you really know what you're doing. And we're going to move forward and we want to start a relationship. This piece of paper, this little booklet, it's about 10 pages. That booklet right there created the relationship for me with these guys. So you want to get a credibility book, okay? And those are the 4 things, guys. So you want to get educated, you want to let everyone know, you want to start asking people, and you want to get a credibility book. I'm going to give you the 4 lead indicators. Remember I talked about lead indicators? Right? The 4 lead indicators for you and me as real estate investors. Okay? Number 1, write this down. Offers. If you're brand new, right? My son asked me today, hey Dad, when you started, were you doing everything? I said, yep, not doing everything now, but yeah, I was putting my own marketing, answering my own phone, going on to see these houses myself, putting my own offers, executing everything myself, right? How do you make offers? Right, the lowest hanging fruit is join Facebook groups that have different investors, that have different stuff. Like you guys are in our group, right? Engage there. Wholesalers, put deals there. Talk to people, go find other groups. Number 1. Another low hanging fruit is go to Craigslist. Go to Craigslist. If you go to Craigslist, I teach this, by the way, in my course here, and I had this up here. I teach all of this stuff, but I'm gonna give you guys some stuff for free today here on that. Go to Craigslist. Go to Craigslist and go for sale by owners, and you put an ad there saying, I'm looking for deals. Wholesalers, bring me your deals. You start calling wholesalers. Those guys that are putting We Buy Houses Cash, you start calling those guys and say, hey, put me on your buyers list. That's how you then start the lead what, guys? Lead what?
Indicators.
Lead indicators. That's a lead indicator. So you start calling these people when you say, hey, put me on your buyers list. Do you have anything? Right? Eventually you're going to start getting deal flow coming to you, and then you start making offers. So number 1 is making offers, but before that you got to get the deals, right? So number 1 is making offers. Number 2 is close the deals. Write it down. Close on the deals. I'm not going to put it on the board here. Number 2 is close on the deals. Number 3 is execute on your business plan. So, if you bought a house and you did the numbers and you said, okay, I'm buying that property to flip it, then freaking flip it. Right? When you close, the next day, have a contractor in there working. Flip it. If you bought it to fix it and rent it, then freaking rent it. Have a contractor in there working to freaking rent it, and then get a property manager and rent it. Right? Execution. So offers, closings, execution. And lastly is what we're talking about today, is raise capital. If you do those 4 things, guys, I promise you this. So this is what I teach my students, my coaching students. I'm not taking any more coaching students this year, by the way, so don't ask me. I'm at capacity. 4 things you need to do. Offers, close, execute, capital. You focus on those 4 activities and you'll do deals. Actually, if you focus on those 4 activities over the next 90 days and you put an hour to 2 hours every day into it, you'll have a deal in the next 90 days. Rob?
Yep.
And Veronica are attest to that. Yes or yes?
Yes.
You will have a deal. There, I gave you my coaching. That's my magic bullet right there. Bam. That's it. Now go take action. Hold yourself accountable. Offers, close, execute, capital. It's that simple. Those 4 things are the top lead indicators. If you're doing those 4 things every week, your pipeline is going to explode. That's what we do. That's what I do in my business. Damien's my VP of acquisitions right here. That's what we do, right, Damien?
Yep. And then, just as you invest time and energy into the business, eventually you're going to just get that random call or that random message saying, hey, I have a deal. That becomes unexpected. So just put in the energy and you're going to get the results.
Okay, anyone has any questions on this so far? Any questions on what we just shared? On these 4 principles. Any questions on these 4 principles? We're moving on? Moving on, going once, twice, sold. All right. All right, guys. So many of you come here, right, because you want to learn about real estate. How many of you come here because you want to learn about real estate? You want to get a deal or something like that. Here's what I'm going to tell you. I consider myself to be a successful investor, right? This is what I do full time, all day long. My whole entire family is in real estate, right? I'm going to tell you the secret to this thing, and I'm around a lot of my acquaintances and friends are high-level investors. I'm going to tell you that this stuff that I just showed you here, there, it's a small part of the equation. The biggest part of the equation is in your head. How you talk to yourself. What do you say to yourself? When you think about real estate, what's the discussion that you're having with yourself? Does it excite you? Does it scare you? It should scare you a little bit. Right? Does it scare you? Does it scare you to the point that it paralyzes you? When you think of, hey, I'm going to go to Martin or I'm going to go to Bob and ask him for $100,000 to invest in a deal, how do you feel? Where's your confidence level? This is all a mindset game, guys. I'm telling you, 80% of this game, it's mindset. It's how you manage your head. Listen, guys, I've shared before here, that property I was talking with you guys that we have a $600,000 value add in less than a year in Tobyhanna. We have it up in the market. Listen, in December, my business plan for this thing, our business plan was, we're going to buy this thing and we're going to leave people, right? So we bought it and we were like, we're going to leave the tenants that are in there. They were all paying below market rents, $300-400. We're going to leave them through the winter. We bought it in October. We're going to leave them in there until the spring, right? Until the spring, because we didn't want any vacancies in Mount Pocono in this freaking cold weather and have to heat an apartment. We're going to leave them there until April, May, right? And then we're going to start executing on our plan. Well, we took over the asset. We said we're going to give them small increments, right? We're going to just, they're paying way too low. Way too low. We're going to give them just small increments, just $50 increments. We're not going to go in there and rock the boat. And we did that. We did that in 60 days. In 60 days, the minute we did that, we lost 2 people. $50, we lost 2 people immediately. Right? Now, I had a whole gut job I had to do in an apartment. In December of last year, you guys remember how rough of a winter? And so, can you guys remember how Mount Pocono was? It wasn't fun up there. In December, we had to do a whole gut job. And I had gravel in this driveway, and it was muddy, and it was disgusting, and it was snow all over the place. People couldn't turn out, turn in, they couldn't park. If that was to happen to you, where is your mindset?
Scared.
What are you thinking? What conversations are you having with yourself? Because that's what matters right there. Right there, that's what matters. Are you saying, holy crap, this is scary, this is over, oh my gosh, all this, I had 2 vacancies, so I had to pay for heat in 2 properties, in 2 apartments, and one of them was completely gutted, and I had contractors in there. Do you know what contractors do in the winter? They raise that freaking thing to 90.
The whole place.
And then they leave the windows open, and you go there and you're like, yo, dude, I pay for this here. You know what I mean? And they're like, no, we need it for the sheetrock to dry and the floor to, right? You're like, I don't care about that, man. I'm paying for this. Can you put it at 70? Right? So anyways, what is your mindset there? What is your conversation with yourself there? You know, someone recently asked me, you know, how did you do that? How did you get it from, you know, in less than a year? Actually, one of my investors, last week, we were in I was on Thursday, my business partner and I announced to them, hey, we promised you we were going to get you out in 6 years, but we're going to get you out in 1 year, and we're going to double your money, not in 6, but in 12 months, right? And they asked me, Calvin asked me, he said, well, how did you do that? And I said to him, you remember when I was sending you the videos in December with all the mud and all the shit and all the surprises I got? That's how I did it. Relentless focus. Just, I'm more committed, right there guys, to succeed in real estate. You have to decide. I made a decision that I was going to be a real estate investor and I was going to win no matter what. I was committed and I was taking action. I was there almost every day on my contractors, dealing with the tenants, my property manager, the garbage, managing garbage. Dumpsters couldn't get in because we had all that snow, and it was a crap show. If this happened to you, where is your mindset? Right? So the rest is just execution, right? The rest is just, okay, contractors, you do it, manage them, watch them, you know, you got a team to do it. But what are you saying to yourself? Where's your focus? Having a coach and a mentor helps you, right? Helps you reframe yourself, right? So you're coming from a place right now of scarcity. If there's anyone else in this room, I just want you to know that you're coming from a place of scarcity, right? So you can come from 2 places, a place of scarcity or a place of abundance, right? So you just saw the data. When you hear the data, what does that do for you? Right? What does that do for you? Right? The data should allow you, right? It's not your mind anymore. It's the data. Now when you hear the data and you're processing the data, whatever your brain is telling you doesn't matter. I know that's easier said than done. Right? I know that's easier said than done. Whatever your brain is telling you doesn't matter because the data is telling you. Right? Is there opportunities in this market? Is your brain lying to you now that you looked at the data? Yeah. Obviously, right? See that? My brain is lying to me, right? Because your mind, guys, is a mindset game. Your mind doesn't like to leave blank spots. It does not like blanks. Your mind fills in the blanks. You know, I went to visit a friend last week, and I'm on the car. I'm a Sonic brother. We're on the car. I'm with a friend, and we're in the car, and he's telling me something about my master, my worshipful master, my lodge. He's like, oh, he moved or something he said. And I immediately assumed, I was like, wait a minute. He didn't say something when my brain filled in the blank and said, oh, they live together. He was like, I didn't say that. I was like, but I assumed that because you said X, Y, Z. So my brain filled in the blank. This is what, when you do the data doesn't allow your brain to fill in the blanks. What does the data say? Not what I feel, not what I think. What does the data say? Right? And then you got to do the work in your mind.